In today's market, where we're seeing prices of homes starting to become stagnant or reduced in price, here is a mortgage hack that I want you to keep in mind, whether you're an agent, someone buying, or even selling your home. My name is Kenny Katz. If you're new to my channel, welcome. I do upload videos weekly on mortgage tips and advice for investing in real estate. So be sure to hit that subscribe button and let's get right into it. So you're shopping for a home right now and a little frustrated because the interest rates have been rising. However, what we're starting to see now is more inventory becoming available. This is something I want you to keep in mind as you're negotiating, whether you are a buyer, a buyer's agent, if you're helping sell a home, or even the seller as well. So what I want you to understand is a lot of times when homes are sitting on the market a little longer, what naturally happens is a buyer will come in and quickly lowball on the purchase price. The seller would be less inclined. However, in this market, things are looking to shift a little differently. So here's a mortgage hack I want you to keep in mind if you're out there actively looking for a home and have experienced the increase in interest rates. This is how you can offset that in our current market. And this applies to you as a seller, seller's agent, a buyer, a buyer's agent. In this example, I'm going to use a home purchase price of $500,000, buying as a primary residence with credit scores of 740 and above on a 30-year fix using 5% minimum down payment. So do you think it's more advantageous to reduce a home price by $15,000 or ask for a seller credit of $15,000? In this example, I'll be able to show you the difference of the two. On a $500,000 purchase, if you were to reduce the price down by $15,000, you can expect payments on a 6.5% interest rate to be $34.37. That includes your taxes and insurance. Any HOA will be paid separately. However, because you put only 5% down, remember you have what you call PMI, the private mortgage insurance. Anytime that you put less than 20% down or have equity in your home, you'll be charged PMI. So that's your payments when you were to reduce your price down by $15,000. On the other hand is the mortgage hack I want you to understand is if you were to ask for a seller credit instead. By taking that seller credit, you can then buy your rate down, from 6.5% down to 5.5%. This is what you call discount points, is what you may have heard it as. And ideally, a discount point is typically 1% of your loan amount. So in this case, let's call it $500,000 before any down payments. You can expect a discount point to be $5,000 for every point that you buy, right? So that can vary based on loan size, based on the bank that you're using. But ultimately, let's just say in order to reduce your interest rate by 1 full point from 6.5% down to 5.5%, you can expect to pay $10,000. Okay. So with that $15,000 credit, what I would advise you to do is buy that rate down, because reducing it down to 5.5% interest would make your payments to $3,072. Now, by buying down your rate, that's also going to save you some money. But additionally, what I want you to do is take that remaining credit of the $15,000 and do what you call pay that PMI up front. A lot of people aren't aware that PMI can be addressed in several ways, not just by putting 20% equity into your home, but you can pay for it in a lump sum. And by doing that, you can finance it into your loan amount. You can bring that amount to the table as part of your cash to close, or you can do what we call finance half of it into the loan, where you're going to be paying for it monthly, but on a smaller scale. So in this example, I went ahead and absorbed the full PMI lump sum premium. That came out to a little bit over $8,200 for this size loan. Again, considering the credit scores and everything that I mentioned. So that you're going to have a little surplus difference. We had $15,000 to play with, but that's not to say that you can bring that difference to the table. So in this case, what we did was we took that $34.37 payment a month and reduced it down to $30.72, giving you a savings of $365 a month. So ultimately, as a buyer, you would be benefiting a lot more by reducing your interest rate. And instead of asking the seller for a $15,000 reduction, ask for a seller credit. Start with negotiating maybe $10,000, $15,000, whatever that nominal number is, that can always be applied towards paying down your interest rate and paying off that PMI. So this is what I encourage you to look into. Make sure you speak to your buyer's agent to help you with that. Connect with a lender that understands on how to structure the loan to be able to achieve this. And then also, all parties involved will be happier all around. If you found this video to be helpful, be sure to share this with any family or friends that are actively looking or that can use this tip. And if you haven't already, hit that subscribe button. Thanks so much for tuning in today, and I'll see you guys on the next one.